So, audio and video crystal clear, I hope so. Let us start now. Dear friends, in the last class, we referred by discussing elaboratively the concept of the refund of input tax credit. It may be input tax credit on input goods, input services, or it may be refund of our what we can call the electronic cash ledger excess payment, or it may be refund of capital goods credit by molding it as payment of IGST. These and all the issues in the last class we referred. Now I am going to refer to you the furthermore points, my dear friends. As I told you in the last class, when the department granting the refund RFD 06 order of refund, it is very crystal clear they are going to be directly give the credit to the bank account of our namely the applicant who given the bank details when submitting the refund application RFD 01 to that bank account. If the department once satisfied the refund claim will be directly crediting the bank account of the applicant refund amount. We understood like this all these points in the last class. Further presenting now, my dear, the concept of refund of GST, which I am presenting by referring your page number 337. Please refer the page number 337, where it is clearly mentioned by saying that the refund of unutilized input tax credit, section 54, subsection 3, clause A, zero rated supply. If there is a case, supply made to the registered person, I mean to say supply made by the registered person to a person who may be located in the SEZ unit as a unit of SEZ or developer of SEZ, or supplies taken place outside India, supply made by registered person, such a person we called zero rated supplier. Thereby such a zero rated supplier eligible to claim input tax credit by applying the formula as referred under your particular rule number 89 sub rule number 4. Referring here for a kind consideration, rule number 89 sub rule number 4 of the CGST rules, where formula based refund is allowed to you. Formula based refund. What formula has been granted here to claim the refund means the formula is as follows. First you have to take into account net input tax credit. Net input tax credit nothing but what? Net input tax credit is nothing but the input tax credit on inputs as well as input tax credit on input services. As you are aware of that, in the given case, GST credit on capital goods, ITC is not allowed. Therefore, net credit, net input tax, which period? The period for which you are claiming for refund. Sir, I am going to claim the refund for the month of October 2023. For that period, input tax credit. Do not add the opening balance input tax credit. Therefore, net input tax credit on input services that you multiply with exported turnover for the tax period. Exported turnover. It may be supply of goods, supply of services, as the case may be, divided by total turnover for the tax period. Total turnover means for the period of October you are claiming, or for the quarter October, November, December you are going to claim. For that quarter, for that particular month, the period for which you are going to claim the refund, that particular turnover it is. That export turnover of that quarter or that month divided by the total turnover of that quarter or that month, as the case may be, net input tax credit on inputs and input services for that tax period. The input tax is attributable to export turnover, you are eligible to claim refund. Now, here I would like to bring to notice some additional important points. If you refer the page number 339, please refer the page number 339, my dear friends. Refer the page number 339. All of you referred?
Yes, sir.
Yeah, I would like to request you, Uday Kumar, could you please read that particular with effect from 5th July 20 amendment? Please read, my dear. Loudly, please.
Explanation has been inserted in Circle 4 to clarify that while calculating refund of interest ITC in case of zero-rated supply without payment of tax, value of goods exported out of India shall be taken as by notification number 14/2022 CB dated 5th July 2022.
Yes.
1.
Yeah. Go ahead.
1. The pre-owned board FOB value declared in shipping bill or bill of export form, as the case may be, as per the shipping bill and bill of export forms regulation 2017, or the value declared in invoice or bill of supply, with whichever is less.
Good. Now, I would like to bring to a notice here. This numerator, what you are talking about, exported turnover, means what? How we should understand this terminology of exported turnover? Exported turnover, how to understand? They're asking us to identify. I will tell you here, this export turnover, nothing but the following. They said here, FOB value shown in the shipping bill. FOB value shown in the shipping bill. When I export the goods or especially supply to SEZ, or as the case may be, when export the goods especially outside India, the FOB value I used to export at FOB value, free on board. What is free on board? I will explain to you under the GST, under the customs law. For the time you understand what is the value of export which has to be shown in the shipping bill to get the prior permission for export of the goods from the Department of Customs. So FOB value. What is a FOB value? So for example, FOB value shown in the shipping bill, for example, my dear friends, let us say USD. You shown in the USD, for example, $1 lakh, because all exports generally denominates in the foreign currency. So with that intention, I'm telling you, assume a scenario if it is like that. For example, it happens so. In case if it happens so, one more point I will be making here, if possible. Yes. So most crystal clear, and this will be moving according to my requirement. Fine. So in that case here, if you refer, my dear sir, especially light adjustment of camera required. That's why I am just turning, my dear, if possible, to the extent possible. I hope so. Will capture correctly. Yes. So when you refer here, my dear sir, $1 lakh, exporting the goods at $1 lakh, FOB value shown in the shipping bill, or invoice value. That means the value declared in invoice. For example, USD. For example, here, see, let us say $90,000 USD, $90,000. So among the two, whichever is less, which is less here, $90,000 is the less value. That you have to choose while deciding the export turnover. Export turnover here, add inserted a particular provision. What is that? The value shown in the shipping bill as FOB value if the goods are exporting through sea or by air, or the value shown in the invoice, declared value in the invoice, as the case may be. Among these two, whichever is less should be considered. I taken less, $90,000 USD. Therefore, here USD $90,000. Up to this, no problem. You got it. Further, what here means, sir, you have to understand here one more point. There is one more. Already there is an adjustment we have. Zero date supply for the numerator itself. Zero date supply for numerator, same page, page number 339. There is zero date supplies. There is an amendment already taken place. Definition of turnover of zero date supply. Turnover of zero date supply means this: exported turnover, nothing but turnover of zero rated supply only. So this zero rated supply turnover is what further? They said the above one is recent amendment. For the purposes of determining zero rated supply, the value of goods export outside India, it should be FOB value or the invoice value. Among the whichever is less should be considered. That considered. Thereafter, keep that separately. And already we have a formula further. Zero rated supply means, zero rated supply of goods means, they said value of zero rated supply of goods made during the relevant period without payment of tax under the bond or letter of undertaking, that value or 1.5 times of the value of like goods domestically supplied by the same or the similar placed supplier. Now come here, look here my dear sir, here important to refer, this $90,000 not confirmed. This amount, whichever is less among these two, FOB value or the value shown in the invoice, $1 lakh or here $1 lakh or rupees USD $1 lakh or 9,000, whichever is less we taken already. That value is $9,000. That you compare with further compare with 1.5 times of 1.5 times of such similar goods cleared into domestic market. Such similar goods cleared into domestic market. Now here, this is US dollars. Locally, 1.5 times of domestic tariff area clearances of such goods. These goods are valued, let us say, for example, 70 lakhs of rupees. 70 lakhs, or you take it here as 30 lakhs of rupees. 1.5 times of domestic clearance of such goods. How much comes here? Which comes here? 45 lakhs. That similar goods in US dollars is there. That you convert it to Indian rupees. Which exchange rate should be considered? For your kind consideration, we have under the GST law, rule number 34, which talks about exchange rate. Exchange rate for export of goods, exchange rate declared by the CBIC. Import of goods, also exchange rate declared by the CBIC. So CBIC exchange rate, for example, my dear, let us say here it is the declared as the, let us say, 65 rupees per dollar. How much comes here the value in Indian rupees? $65, 65 rupees per dollar. For $19,000, how much amount? 8,50,000. Good. So 58,50,000 or 45 lakhs, whichever is less. That means to say that first step, the FOB value of export shown in the shipping bill or the declared value in the invoice, among to whichever is less, choose that. That is a numerator for your formula to claim the refund of input tax credit. While taking the numerator, also compare that 58 lakh 50,000 what you chosen as the lesser value, you compare with the 1.5 times of such goods cleared into domestic tariff area. Such goods cleared into domestic tariff area is, let us say, 30 lakhs. 30 lakhs worth of the goods. The value what you are telling is in India when you sell is 30 lakhs only. If so, the 30 lakhs value multiply 1.5 times. 1.5 times of the domestic clearances of such goods, which came 45 lakhs. Now, if it is worthy only for 45 lakhs, how can you claim numerator as 58 lakh 50,000? If the numerator is going up and up, the refund claim also more and more. Resultantly, they said you take the 58 lakh 50,000, compare with the 1.5 times of domestic clearance of such goods. Amount to whichever is less. I came to know that which is 45 lakhs is the lesser value. Resultantly, what I will do here is I will mention the numerator as my 45 lakh is my numerator value for formula purpose. Of course, total turnover is a turnover cleared for DTA as well as export taken place together is a total turnover. And net credit, you are aware of that. Net credit on input services only, not on capital goods. As you are aware of that, capital goods did not qualify for ITC. Not qualify for refund. It is only qualify for ITC. Repeating, capital goods credit allowed only credit. It cannot be qualified as such for refund claim. So that you are aware of that. Net input tax credit multiplied by the export turnover by total turnover for the tax period is the amount going to be get as your refund amount. Now we got this clarity now. This clarity is a formula. Main formula it is net input tax credit multiplied by export turnover. Export turnover means it should be FOB value shown in the shipping bill or the bill of export if the goods are exporting by land route, as the case may be. That value compare with the invoice value, whichever is less, that you compare with 1.5 times of your DTA clearances. Among these two, whichever is less is the value should be numerator. Then accordingly, total turnover, that value plus the local clearances together is a total turnover. Here, such a clearances are made. How much here? You see, 30 lakhs. 30 lakhs of clearances are there. 45 lakhs plus 30 lakhs total turnover purpose. It will be here how much? 75 lakh. If the net credit here is, for example, net credit is here is rupees 2 lakhs on inputs plus rupees 1 lakh on input services, total how much? 3 lakhs. So now tell me how much the refund amount. My refund amount is equal to how much in the given case? Please tell me, my dear friends. That's it. Refund amount in the given 1.8 lakh is the refund amount which can be refunded. RFD 01, application to RFD 06. It is order of refund from GST RFD 06. RFD 01 to RFD 06 is our refund amount, which is going to create to the bank account of the applicant directly. And at such time, in that case, the chartered accountant, cost accountant certificate not warranted, even the value exceeds 2 lakh, because it is not applicable, that provision not applicable for a zero rated supplier, that provision not applicable for a person who claims excess amount in the electronic cash ledger. Certificate not required from a chartered accountant or cost accountant. And also you are aware of that the I'm going to explain now. A person who is unregistered person want to claim the refund from the department. Yes, unregistered person also can claim refund. In that case, such unregistered person claim the refund more than 2 lakh rupees. Requirement of a certificate from a chartered accountant, cost accountant not warranted. 3 situations. The situation 1 is export of goods or services where the amount is more than 2 lakhs refund claim, no problem, no need of any certificate from CA or CMA. Second point, excess kit electronic cash ledger want to claim refund even though more than 2 lakh rupees, not required to obtain the certificate from CA or CMA. Further, in the given case where the unregistered person who want to claim the refund, unregistered person want to claim the refund from whom? From the what we can call department, not required to obtain a certificate from chartered accountant or cost accountant, even though the value of the refund exceeds 2 lakh rupees. Unregistered person claiming refund, I will explain to you by inviting the rule number 89, sub rule number 2 in due course. For time you understand this? This procedure understand? Formula.
Yes.
If formula understand, I will bring the numeric example here. You will be get crystal clear in the given case. Refer your page number. Kindly refer your page number 342. Page number 342. Example 2 is there, huh? Example 2 is there? Yes? Page number 342. Afifa, you read amma. Example 2, please. Start loudly read.
During the relevant period of refund, details of its inward supply and outward supply details are shown in the table below. Outward supply Roman value per unit 200, number of units supplied 5, turnover 1000. Export 350 value per unit, number of units supplied 5, turnover 1750.
Okay. Good. Very good. Now please come back. In the given case, same formula. I am not going to be change it because rule number 89, sub rule number 4 is now a comprehensive manner has been invited to claim the refund. Now listen, my dear. In the given case, they are asking to claim the refund. They given the refund. They given the amount of input tax credit. Net input is given the problem. How much is given? Rupees 270. They given. Correct? 270. Export turnover we want. Now listen. Here, in the given case, FOB value of exports have they given here? They say export is given. Export, how much they given here? Let us say 1750. Correct? They showed export. Export means export FOB value. FOB value 1750 rupees they given. Fine. In that case, this one. And the value declared in the invoice, which is not known. Not known. If not known, leave it. FOB value is given. Take that FOB value. Now, next step. Rupees 1750 or 1.5 times of similar goods cleared into domestic tariff area. They have given here. They given local clearances. Such units are given. Same quantity is given. Quantity same given. Comparability is there. So same quantity is given. How much value is they given? 200 rupees per unit given. 200 rupees per unit. 200 rupees per unit. Number of units 5 units. Number of units 5 units. Therefore, in the given case, my dear, you will get here. How much value you will get here? 1500. Among the two, whichever is less, which is lesser value? Whichever is less one you have to take it. Therefore, our export is 1500. Export turnover here is 1500. And total turnover when you come, my dear sir, total turnover in that is nothing but what? Both together. It's nothing but both together. One is export turnover plus domestic tariff area clearances. We notice export turnover is 1500. That you take as such. Do not take the given value in the given problem 1750. That is not my export turnover for formula purpose. I have identified and noticed 1500 as my export turnover plus local clearances, DTA clearances. How much? 200 units, 200 rupees per unit, 5 units, which is rupees 1000. As a result, I got here 2500 is my value of total turnover. So 1500 divided by 2500 multiplied by the net credit. How much? 270. How much comes? My refund amount 160, 162. Correct? Is the amount of refund claim. Any doubt in the given problem, my dear sir? Any doubt in the given problem, let me know. Yes, this is a clarification given by CBIC. This is not my example. The example given by the CBIC with regard to rule number 89, sub number 4 to explain to the industry how to adopt this particular provision. Now, here one addition taken place in the recent past from the June 2022 onwards. This turnover, export turnover, first to compare FOB value and invoice value. Sir, generally you can ask me, such a deviation not correct, no sir. FOB value shown in the shipping bill as export value, which is different from FOB value of export invoice. It is not correct approach, no. Sometimes not correct approach, sometimes maybe the correct approach, where there is invoice has been prepared. After preparing the invoice, after inform to the particular person, there may be escalation clause which causes to hike the price. Resultantly, importer accepted, okay, I understand, you can increase the price than that of the invoice, I will make the payment. Like that, a confirmation might have been given by the importer. Resultantly, the exporter, while preparing shipping bill, he may increase the value than that of the invoice value. In that case, what is to be considered means FOB value shown in the invoice as well as FOB value shown in the shipping bill, among the two, whichever is less. If it is not deviated, that remains same. What is shown in the shipping bill is shown in the invoice, both are one and same. Then question of whichever is less does not arise. Take that value. I take the value. That you compare with 1.5 times of the similar goods cleared into the local market. Quantity remains same. What quantity you exported? See, rate per unit. That's why I take rate per unit. Rate per unit is 200 rupees. Rate per unit is fixed. It not varies. Variable cost varies in total. You are aware of that, na costing? Variable cost varies in total, but variable cost is fixed per unit. That is not going to be changed. Okay, careful. This particular, what we can call variable cost per unit is fixed. So, how many units you exported? Sir, 5 units exported, sir. Very good. Local market per unit, how much? 200 rupees, sir. So 500 units exported. If you sell in India or if you have been cleared in India, what would be the value? The value is 5 units at rupees 200, sir, which is 1000 rupees, sir. In that case, among the two values, whichever is lesser value should be considered. I taken 1500 is lesser value. So 1500 is lesser value, which is chosen as my export turnover. Then when you determine the total turnover, which includes export turnover plus local clearances. What is my export turnover? What is taken in numerator, that only take as a denominator only for the formula purpose to determine the refund value. For that purpose only, I am asking you to identify like this. Got the clarity? So, this is a major part. Once you understand this, I will proceed to explain to you the refund claim. Coming back to our regular study where we have the, what we can call page number 337. Page number 337. There is inverted rate of tax. There is inverted rate of tax. What is inverted rate of tax? How to claim the refund? I will explain to you. Inverted rate of tax, where the duty structure is provides the inverted duty, resultantly you have excess credit, inverted duty structure. That means to say that my inward supply higher rate of tax, my outward supply became lesser amount of tax. Resultantly, I wind up with the excess amount of input tax credit. In that case, how we should understand the point? Here, I am talking about rule number 89, sub rule number 5. Rule number 89, sub rule number 5. First of all, one should understand what do you mean by inverted rate of tax. Listen to me, my dear friends. Inverted rate of tax. Thereby excess credit has been taken place. Assume a scenario. There is Mrs. X Limited, who is a basically manufacturer. This manufacturer purchased raw material for rupees 1 lakh. IGST paid by him, let us say, IGST paid the rate of 18%, which is 18,000 rupees. And also they procured here the input services received. Input services, where it is value 1,50,000 value, then IGST. Assume the IGST for the given case is, let us say, 18%, which is how much will come? 27,000. Correct? Obviously, I am right or not? Further, they too have capital goods. Capital goods purchase value 2 lakhs. Also, they suffer the, for example, IGST is, let us say, 18,000, which is nothing but 36,000 is their input tax credit. So, is the way in which they have, and after that they produce finished product. They produce finished product, a different product whose value, let us say, 3 lakh rupees, and that GST they are liable to pay. Let us say IGST, for example. I am taking the IGST as a base, sir, simple. It can be taken CGST also. Now 5%, which is 15,000 a month. Correct? 5%, 15,000. Now listen here. In the given case, my inward supply, what rate of tax applied? My inward supply here applied 18% GST. 18% GST on inward supply. On inputs, is inputs. On inputs. 18% GST. Whereas my output attract what rate of GST? 5%. This is called as inverted rate of tax. Now in the given case, my dear sir, my output is 15,000 liable to pay. My input tax credit, how much is there? 18,000 is there. Resultantly, I have excess credit in my books all the times. What I can do with that excess credit? Can I ask for refund? Refund is allowed to you. X Limited, under rule number 89, sub number 5, you are entitled to claim refund. You are entitled to claim refund. Yes, you are entitled to claim refund. What is the formula? Rule number 89, sub number 5 given elaborative formula. Now you can ask me, sir, what about input services, sir? There is 18% GST, sir. Capital goods, sir. 18% GST, sir. This also is excess credit only, sir. Sorry. Though the input services and capital goods we have as inward supply higher amount of tax paid than the output tax liability. In that case, this input services and capital goods credit not allowed and credit not allowed to claim refund under inverted rate of tax structure. You may be eligible to avail the credit on input services, credit on capital goods you can utilize for payment of your tax liabilities, but does not ask excess credit on account of input services and capital goods where you have a lesser liability to pay. That excess credit is want to claim refund, sir. Refund under the inverted rate of tax structure not allowed if you have excess credit under dash and dash measure head under the CGST, SGST, IGST of input services or CGST, SGST, IGST of capital goods. Excess credit refund not allowed. If and if refund allowed under the inverted rate of tax structure by applying the formula number 89 sub number 5, only inputs on which GST paid excess than that of output tax liability, that alone qualify for refund. A detailed explanation has been given with regard to this, which I am going to bring to your notice now. Look in the given study material for illustration. This is a elaborate formula also be drafted in the given case. Page number 345. Please kindly refer the page number 345. Page number 345. There I have been mentioned by saying that inverted rate of tax as per section 54 subsection 3 clause 2. Read with rule number 89 sub number 5. So I will present here section 54, section 54 subsection 3 clause 2 of CGST Act. Read with rule number 89 sub number 5 gives elaborate amount of formula based approach. What is the formula they given here? They stated that net input tax credit multiply with turnover of inverted rate supply of goods and services divided by total adjusted turnover from the deduct tax payable on such inverted rate supply of goods and services multiply with the net credit divided by total input tax credit availed on input services. But at any circumstances, you should not be considered the denominator purpose capital goods credit. Now, a new formula, it is a amended one, recently amended, and it is applicable even a couple of attempts before itself. In the month of July exam onwards is applicable. July 2023 onwards is applicable. It's a new amended provision. Earlier, the simple formula, now they have been elaborated. Why it is elaborated means to avoid misuse of input tax credit. Do not claim excess amount of refund is the intention of the government. So I am presenting here formula section 54 subsection 3 clause 2 says refund you can claim is allowed, refund of inverted tax. This refund based on the formula under rule number 89 sub number 5 of the CGST rules. If so, they said here, take first net input tax credit. This net input tax credit is what? This net input tax credit nothing but, my dear friends, be careful, ITC on inputs only. You cannot take anything other than this. You cannot take other than anything here. Net credit only ITC on inputs multiply with, they given the turnover of inverted rated supply of goods or services. So turnover of inverted rated goods only I will mention. The formula says services. For the services, they yet to notify. Therefore, Only goods. Turnover of inverted rate tax means what? Raw material what I purchase at 18%. Used for finished goods. That finished goods supplied 5% only. In that case, that turnover divided by here total turnover, adjusted total turnover for the tax period. This is not sufficient. From this you allow to deduct. From this allow to deduct. What is to be deduct here means further deduct by applying the formula. Tax payable on such inverted rate of turnover. Here first net is common. Net ITC. This net ITC is nothing but what? Net ITC of the input tax credit on inputs. Multiply with tax payable on inverted turnover divided by the total ITC availed on input and input source only. Therefore, here ITC on inputs and input service. I think visible this one is visible. This visible, my dear friends. Yeah, see. Now, in the given case, how we should have to understand this, sir? I am telling you the example. My dear sir, I have raw material 1, raw material 2, raw material 3, raw material 1, raw material 2, raw material 3, which used for manufacture of my finished goods. Here A, B, C. Now raw material 1 GST on the raw material 1 18%, here 12%, here let us say 5%. Here the finished goods on which GST, let us say here it is 5%, here 12%, here finished goods 18%. Now raw material 1 used for production A, raw material 2 used for production B, raw material unit 3 used for production C. Now in the given case, which one is called as inverted rated turnover of inverted rated goods? Which one means only unit A? That means the finished product A. Finished product A is only called as, this one is called as inverted rate turnover, because 18% of inward supply, outward supply only 5%, thereby excess credit resulting inverted rate structure it is. Further 12% inward supply, raw material 2 and output B 12% only, no inverted rate of tax. Here 5% is inward supply, but GST payable on finished goods 80%, no inverted rate of tax. Inverted rate of tax means my inward supply of inputs higher rate of tax, my outward supply of goods going to fall very lesser amount of tax. In that case inverted rate turnover is finished goods product A, that is the numerator, divided by total turnover of the ABC here, ABC turnover is the total turnover. Net credit nothing but the credit on raw material 1. Raw material 1 is the net credit because ITC on inputs only should be considered. Further, from this deduct net ITC on raw material input 1 only, because that is qualified for what we can call inverted rate supply purpose. So net input tax credit multiplied by tax payable on inverted turnover. What is the inverted turnover? Finishing goods A. Finishing goods A, what is the value of supply you made? On that 5% GST payable. So that is called as tax payable on such inverted turnover divided by input tax credit and input services. Here input tax credit on input services means input tax credit of raw material 1, raw material 2, raw material 3, total input tax credit and inputs plus any input services credit, that also, that is numerator. Then if this value lesser than this output value, that means the output is a positive figure, claim refund. If it is 0 or negative, no refund. Got the clarity?
Yes, sir.
Now, really speaks, I enjoyed by taking this whatever maybe half an hour class on whiteboard, because is what my presentation earlier. After this corona, we have been forced to move to the online class and that this and making struggling and wasting our time connecting, disconnecting, net connection, that problem, this problem. But anyhow, are you comfortable with this type of approach of my presentation than that of the earlier presentation? Material is there with you, am I right? The material, what I am explaining, I am referring page number. Please kindly refer the page number 345. In that, the formula is there. Rule number 89, sub number 5, formula is there. That formula I am explaining here. So, if you are comfortable with this, hopefully I will take this type of approach only to present. If you are comfortable. No, sir, go back, sir. We want the screen look like backside, good scenery, that and this means I will be like, my students will and wish, always I will endorse to adapt. And you give a comment to me by WhatsApp. Now, listen, my dear sir. I told you, no, my problem, customer used to rush outside and coming back. Therefore, 6:45, 8:45, yes, 8:40, 7:45, I'm closing the class. And this is lesser amount of mileage. I'm asking you, 9:30 to 10:30 for 1 hour. Are you free or going to office? I'm asking you. Because many of you going for office or traveling. Okay. Fine. In that case, at this point of time, I'm concluding the session and see you in the subsequent session, continuation of from here. Thank you, my dear friends.